Good morning, my futures family and team Topstep. It is time for the market prep. Last trading day of June here, Friday, June the 30th, end of the month, end of the quarter. Our focus here is always on accurate context, good risk management, and remaining patient. My name is John Hoagland. Thanks for trusting me with your time. Yeah, it's the end of the quarter today. We're coming into the Independence Day holiday next week, and something tells me something big is going to happen this weekend. We're all very excited about it. As far as economic numbers this morning, the PCE numbers finally out. Month over month in May came out as expected. Year over year in May, 0.1% lower than expected. The markets seem pleased by these numbers. We're still waiting for the 8:45 Central Chicago PMI and the 9 o'clock a.m. Central Michigan sentiment. So we'll have to see how those play out. And as always, it is the last day of the month, last day of the quarter. And as we always say, anything can happen. We're hoping that you have a successful and profitable trading day today and a nice weekend. We are going to be having the prep on Monday morning, but not on Tuesday. Monday, we won't be having any of the other events that we usually have on Monday, like Make Hoag Money or group coaching. Tuesday, of course, we're all going to be off, hopefully enjoying the Independence Day holiday. Wednesday and Thursday, there will be a market prep, but no other events like group coaching or Make Hoag Money or any reflections or anything like that. So everything will kind of go back to normal on Friday, just in time for the market prep and all of that. But again, we will be doing the market prep on Monday, Wednesday, Thursday, and Friday, I think. But no other events next week because of the holiday and taking care of some business. Well, we got U.S. stock index futures higher this morning. They seem pleased by the PCE numbers. It's going to be a positive week and an end to a positive quarter with all likelihood. Notes from the ECB's annual meeting has the world's central banks agreeing that inflation remains sticky and that rates will need to go higher, even with the Eurozone CPI suggesting, releasing slightly lower than expected. And I think our PCE numbers today are they're looking good. They're looking better. The end of Q2 brings Independence Day holiday and a potentially quiet, hopefully slower week next week. Certainly, we're going to see a little bit less liquidity in these markets. So keep that in mind and make sure that you're aware of the abbreviated hours. I think we're asking everybody to make sure they're flat by noon on Monday. Why even bother looking on Tuesday? Come back into the markets fresh on Wednesday, and we'll see what happens next week, right? The VIX this morning, a little bit lower, 13.52, pretty much right where it was yesterday at this time. The dollar index had a little bit of a rally yesterday, but a little bit lower than settlement this morning at 103.17. It was 102.83 at this time yesterday. Yield on the 10-year taking a little bit of a jump to the upside yesterday. Right now, it's 3.84%, where it was 3.8% yesterday. We saw the 10 years break out to the downside a little bit yesterday. It's good to see some activity and perhaps some change in that market, which has been extremely range bound of late. Make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you get notified when we do go live. And again, it's always a pleasure to see my friends, family, and team here. Kaylee is the first one in the room this morning winning the prize. Casey, good morning. Caprice, Theo, good morning. Will, futures trading today, good morning. Bear goes long. Yes, be patient. Grab your trade. and go outside. Good advice for us there. Bear goes long. Haggle Matters, good morning. Fred, just popping in to wish you all well before I take my daughter to summer internship. Have a great weekend. Fred, have a great weekend, and happy Independence Day, of course, to you all. Shaw, good morning, George. Lacey, the center of the universe, is around here somewhere. She did stop by earlier and tell me to say good morning to everyone. Scott saw, and he conquered. Bill Phillips, Chaz, Rooster, good morning, crowing early here. Henry G, Jason, Stephen, Gnostic, Rusty Golfer, my spirit animal. Trading Research, Orion, good morning. Sarah Hall, prayers and love as always. My brother Tom, good to see you, buddy. I miss you and love you. Travis, good morning. Denise, Michael, Dave, good to see everybody. Hey, Grounds Hero, good morning. Lee Trevino and Trading Like a Bot. It's good to see everyone this morning. If you made it to the Tendler session yesterday, the session we had with Jared Tendler, hopefully you got your questions answered and enjoyed the session. I know I did. It's always a pleasure to have Jared with us. Just just love the way he thinks about performance and improving performance. It's always good to see him, and you can always check that out if you missed it on our YouTube channel, Grounds Hero. I'm going to have a little bit of coffee here for just a second. I'm trying to think if I remembered everything here. Yeah, we got the next week's schedule out, end of the quarter, PCE. Why don't we jump into the charts? Let's take a look and see what's going on here. So, as always, starting with the day, daily in the S&Ps. Well, we saw relatively steady volume yesterday. It was really steady in the New York Stock Exchange from the previous day. And we did add 14,000 in open interest. So we're getting to a point where I may actually put a grade on the auction process here. And if I had to, I'd say at the end of the day yesterday, it was a B-. So the market actually performing better to the upside than it did on the downside. We have this ended up acting like a bull flag, and we still see the market heading in that direction. We got a little too short in the hole down here, it seems, and we're getting close to a potential continuation of the upside market state, and the fact that we're getting relatively close to the weekly kickoff high. Bear bull flag breakout, seeing some open interest coming in on this up move, actually an increase in volume, which is somewhat unusual when the equities continue higher. Questions about the launch, or is that about lunch? All right. So yeah. There will be an email. Yes, there will. We're looking forward to it. So again, we're starting to see the market in a situation where we can give it a grade, and the market already lurching toward the upside here this morning. Here's the 30-minute chart. Overnight inventory is obviously going to be long. We said 2 days ago that the market has ceased putting in lower highs and lower lows and has started putting in higher highs and higher lows, and that seems to be running true right now. So we had our breakout day on Tuesday, Wednesday, Thursday, value moving higher, points of control now moving higher. We've got a gap here, ladies and gentlemen, and a relatively substantial gap to the upside. So overnight inventory is long. That may give us an opportunity to kind of seek a pullback if our overnight inventory longs get a little bit nervous. But here we are, last week's high. Is that correct? Yes, that is last week's extended trading hour high, and we are at it. So this is an important level up here. Last week's high, as well as the weekly kickoff high here, are going to be important inflection levels for us to be paying attention. With an upside grade of B- and some space down below before that's going to break my my primary objective, I think, today is to be patient, wait for the opportunity, perhaps on a pullback created by our overnight longs, to look for an opportunity to buy this market on weakness. Of course, it is the last day of the month. It is the last day of the quarter. So as we say so eloquently here on the Market Prep, A.C.H, anything can happen. Make sure you are using the tools you have to manage your risk, to limit your risk. Overnight inventory long, gap rules. We can't close the gap relatively early. We look for opportunities for continuation in this market. What are the things that I'll be focusing on in seeking, is the market doing well? Well, a lot of it's about the volume early in the session today. And it's about participation and time. To me, price is accepted through time and volume and participation. So I'll be kind of monitoring those things to see if this market is continuing to exhibit buoyant behaviors, if you will. Here's the TPO chart. So yesterday, a normal variation trading day. The lower extreme of the initial balance remained the low of the session. We did kind of experience throughout the day yesterday and at different periods through the day yesterday some delta divergences where price was holding above, let's say, the opening price, and delta was negative, indicating more aggressive sellers that were unable to push price lower. That is, to me, a hint that we may be seeing longer time frame participants in the market just placing bids and getting these short time frame traders too short, which by the end of the day became somewhat evident in the fact that the market closed right up here near the highs. Now, look at where the overnight low is. Look at where the overnight high is. Look at where we are now. Obviously, we still seem to be squeezing some of those shorts, and a lot of those shorts and a lot of positions are probably going to be liquidated today, being the end of the month, end of the quarter, and the week, the end of the week before a holiday week. This is a big holiday week as well. So, what to do? Again, my primary idea is to look for some sort of pullback without a gap close, to look for an opportunity to buy this market on weakness. Here's crude oil, which is just about to open up. And what did we do yesterday? Well, we were, I think, talking yesterday on the Market Prep about how range-bound markets treat retail traders. They get too short at the bottom because the market always looks the worst at the bottom. They get too long at the top because the market always looks the best at the top. And yesterday we removed 15,000 contracts, probably stuck shorts throughout the day yesterday. It wasn't a very directional day, just a lot of shorts just trying to eke their way out of those losing positions. Here's the 30-minute chart. There it is. Value higher. The market was unable to trade into real repair area from the previous day. Market was held up by shorts, probably in the hole here, getting out of those positions. And that idea is supported by open interest, but we didn't put up a P-shaped profile, which is kind of typical of a day like that. So the initial balance, neither the high nor the low, a normal variation trading day, central in neutral in stance, I should say. So, we seem to be kind of seeking the opposite end of the area of balance, which is typical in range-bound trade. Take a look at the daily again. We get up to the bottom, we get up to the high, the target is the low of balance. We get to the low of balance, we can't break out, the target is the high of balance. If we don't break out and we stay range bound, the target is the low of balance. Well, what's our target now? The high of balance. It's just a game. that traders play when we're pitting time frame against time frame. So here's that TPO chart again. The market is now open. If we have an opening range opportunity, here it is. Because we basically are opening out of balance from the previous day. I mean, this is a really even bell curve on neutral stance. The market is typically using up its ability to facilitate trade on days like this, and will typically seek new levels to facilitate trade. It used up a lot of it yesterday. We'll see if it rejects range from yesterday or reaccepts range from yesterday. We know that we had a reacceptance of range off the low here from Tuesday to Wednesday. We opened out of range. We reaccepted inside of value. We traded to the other extreme of value and then some. We had a weak high here. We've got some excess on the lows, indicating downside auctions are completing another kind of normal trading day here. The market is still attempting to try and push higher. Again, we're looking for either rejection or acceptance inside range from yesterday. Certainly, if we get into value, that could come into play again, that value area special situation. Yeah, Brody, that was a nice trade yesterday. We held it to fruition. I meant to mention that this morning because we didn't do a recap or a reflection yesterday. And make Hoag money, I had a problem with the production software yesterday, so I was unable to put it on YouTube. We did have it in the Zoom meeting, but again, I apologize if we were when we were unable to do that on YouTube. We just had it in the Zoom meeting, but yeah, it was a pretty decent trade yesterday. Here's the NASDAQ. All right, NASDAQ is always, it's like my problem child. It always is a little different than the S&Ps. I don't trade the NASDAQ. It just gives me heart palpitations. I'm much more comfortable with the S&Ps. And I actually took a crude trade this week, which was unusual. Well, the one I missed, the one that got away this week, was gold when it tested down to weekly kickoff low and rejected below it and reaccepted back above it. That was one of the best trades of the week, and I missed it because I didn't set it up, and it happened pretty much during the prep. We'll take a look at that shortly. Anyways, here's the NASDAQ. So we lost a little bit of volume yesterday. Open interest did not increase or decrease. We had an increase in the S&Ps, remember, yesterday, where we didn't really change the open interest at all yesterday. As a matter of fact, it's an estimated minus approximately 200 contracts. So the upside auction didn't perform as well as yesterday. Now it started to kind of bring us back into an upside continuation. Yesterday was an inside day. The S&Ps was overlapping to higher. This morning we had an inside day started, but now obviously the market has extended outside of those days. Take a look at the 30-minute chart. Overnight inventory is long. We're finally getting to the level here in the S&Ps, in the NASDAQ, that we were already at in the S&Ps. There we go. Now we've reached this now point of control. We're still looking at last week's high and the weekly kickoff high above. In short time frame, the overnight inventory is very long. If I'm looking for opportunities to seek opportunities for longs, I'm going to hope that our overnight inventory gets nervous at some point and reconciles some of those longs, which should push price lower to better trade locations if I'm looking for longs. And unfortunately, sometimes I'm looking for longs in all the wrong places. All right, enough dad jokes. We're just going to see if this market gives us the opportunity on a pullback to look for some sort of an entry. The last thing I want to do in either of these markets is if they continue to be ballistic to the upside, I don't want to fight it. Don't fight it. If you can't find a way to buy it, don't sell it. Don't sell it just because that's all you can do. So many people will try and step in front of a market that is directional, and you just can continue to get run over. Here's yesterday. The initial balance was the high of the day. I think we went 5 out of 7 for initial balance, high or lows yesterday. Very normal variation day, almost a normal trading day, so very neutral in stance. So that tells me again that the market has used up a lot of its ability to facilitate trade here and is going to seek other levels. Well, obviously it's seeking other levels, and we're going to try and be patient, look for some sort of pullback from overnight inventory to give us a better trade location if indeed we are considering a long position at some point today. Now, gold. What a gift yesterday. Weekly kickoff low was 1902. The low yesterday was 1960. So 14 ticks through the weekly kickoff low, rejecting, and then a really nice trade on the way up. What does that mean? Well, we've got downside structure here. We can see that. We pulled off that low and added 8,000 in open interest on higher volume. This is starting to look a little bit like some excess on the daily chart. And where do auctions die? They die in excess. We've put in an excess low. The doji yesterday kind of indicating indecision at lower pricing. Now we've got price kind of moving a little bit higher. Here's the 30-minute chart. Boom. Couple of little looks below that weekly kickoff low. If you were able to withstand that risk, you were handsomely rewarded, and relatively quickly at that. Well, overnight inventory today, we don't really have any. The market has opened in range and in value, suggesting patience. But I'm starting to kind of get the feeling that this excess down here, which isn't really good excess on the profile, but on the daily chart, looks like the market just got too cheap and was rejected, gives me the idea that I want to start looking for potentially opportunities to look for longs on weaknesses, not on highs, on weaknesses. Here's the TPO chart. So it's not high excess on the profiles. It's not like the market really swiftly rejected by looking at this, but you look at the daily, it came down here twice and then just completely bailed price down here. So we've got a short covering stance in the P shape of the profile, which is not supported because we added open interest. So that wasn't just short covering. This was new buying coming in, which is the reason that I'm thinking, I want to start to look at the possibility of finding structures against lows to look for some long opportunities. Where, when, that's your question. Take a look at the euro now. So euro, pretty good down day yesterday on decent volume. Some of the best volume we've seen since this became the front month, but we lost open interest. Well, the auction to the downside here seems to be struggling if that's the case. Overnight excess, we had excess here, overnight excess. It's still relatively range bound. I mean, last week's high and lower, the extremes I was kind of looking at for opportunities in a little bit longer time frame, and we've kind of missed that because we took this look down in the overnight session. Here's the 30-minute. So here's our look below last week's low in the overnight. Obviously, we've seen buying coming in. The dollar had a little bit of a pop yesterday, and it looks like it may be coming off for us now. But again, directional activity this early in the day. Don't try and fight it. Don't try and pick a top. If you can't find a way in, then be patient. Another opportunity will come along. Here's the TPO chart from yesterday with the IB high. A lot of excess up here. I mean, this market really drove to the downside and, tested at lower levels. Are we, opening and accepting value from yesterday, or are we now rejecting? That's what I don't want to fight a move to the upside if we're going to reject this. This B-shaped profile supported by a loss in open interest was long liquidation. And in range, what does long liquidation do? It takes selling power away from the marketplace. So I'm kind of looking for opportunities to execute on pullbacks if I'm looking for longs, execute on weaknesses if I'm looking for longs. Here's the 10-year with, hey, finally, whoopee. We've stopped this sideways action. We did bring in some decent volume on that breakout to the downside. We also added 48,000 in open interest. So the market state break did what it's supposed to do. It's supposed to bring in volume and open interest. So the potential for this move to continue is a higher probability than, let's say, if we lost open interest on this move to the downside. Traders came in with money to sell this market looking for continuation to the downside. Here's the 30-minute. Here's that big move to the downside, showing acceptance below weekly kickoff low through time. Overnight inventory was a little bit short. We've reconciled that. Now we're back in range and value. Let the market show you some sort of daytime frame structure, and then work your opportunities against that structure. Be it longs, be it shorts, just look for something to come to you throughout the day that's going to give you an opportunity and an opportunity to keep it cheap. This is a pricey tick here in the 10 years. 31 and a quarter. I mean, it is a pricey tick. Make sure you're trading at good trade locations close to points of invalidation to protect yourself. Here's the TPO chart. Yay! B-shaped profile indicating long liquidation, which is not supported by the increase in open interest. Again, telling us this isn't just long liquidation. This is money coming into the short side. If that money keeps coming in, if volume continues higher or even maintains, if we add more open interest today, the market is more likely to continue in that direction. I mean, we were in this range for so long, I almost automatically printed balance on my cheat sheets here for the market prep because it was so balanced. And finally, we got a breakout, increasing open interest, increasing the probability of continuation. Natural gas. So volume slowed yesterday. We, kind of establishing an area of range. I mean, we looked and we tried to continue this market higher. It just wouldn't go. We had a late spike here. We've had a couple of late spikes here. The market really just now located centrally. We got an inside extended trading hour range from yesterday to today. It is starting to look a little more range bound than anything else. Here's all our we're looking potentially at a bull flag here. It's been having trouble holding the lower side of this channel. We may have to move that. But yesterday, downside move, or day before yesterday, pretty decent downside move, taking out the late spike from the previous day. We had a late spike to the upside here. We have a late spike to the downside here. We reject price above that yesterday. This whole area, this level here, which is the base of the late spike here and the bottom of the late spike here, the top of value from the previous day, can't get to it yesterday. Seems kind of important, right? I mean, it's just kind of a visual that I'll be keeping an eye on if I were actually trading the natural gas. This is such a nasty market. There's really no overnight inventory, and we're back in range and value. Stay patient. Here's the TPO chart from yesterday. Double distribution trend day with a P formation, which would indicate short covering, but it is, again, not supported by open interest. We added 6,400 in open interest yesterday. That might indicate new buying coming in. The market has opened. It has now traded to the upper, to the point of control in the upper distribution. Now, maybe it's going to get down to the assumed point of control in this lower distribution of time and volume. It's in a repair mode. Stay patient. Stay patient, Iago. Patience. So important. So important. So, happy Friday, everyone. Monday is my wife's birthday, so it's going to be probably a party here at the house pretty much all weekend. I'm looking forward to having some fun, but I have to remind myself, take it easy, everything in moderation. Make sure you get plenty of sleep. Make sure you stay hydrated. It's probably going to be hot around here today. Still seeing some of that Canadian smoke hanging around. It's kind of hazy out here. So we'll just take it easy and hopefully have a successful trading day today. Remember, it is Capital Preservation Friday. Capital Preservation Friday. Well, hope you all have a good trading day. Make a little bit of money and then start your weekend early. I always say that in the trading pit, if you were still in the pit after noon or 2 o'clock on Friday, you were down money and chasing money. So don't want to see that for any of you. Have a great session today. Have a wonderful weekend. Be kind to yourself. Be kind to others. Pray for peace. Happy birthday, America. I'll see you Monday morning at 7:45, the same bat time, same bat channel. Now, get out there and trade well. Have a great session.